Hello friends, welcome back. Today we are going to backtest our strategy in Nifty Index. Friends, why this is a backtesting video? Because I have full rights to be wrong. So please don't follow me blindly. People who are interested in trading, first start using paper trade. In this video, we will see how to start paper trade also. In this video, we will discuss about the future and option trading, like what is derivative, what is call and put option, what is ITM, ATM and OTM, what is delta and theta, basics about our strategy like how we draw trend line, what is impulse wave and corrective wave, why I execute this trade, what is our stop loss and what is our target. Friends, I am a 100% pure long-term investor and I believe that a long-term investor can create wealth, but trading can create a passive income. With this note, let's dive into our video. Welcome to my YouTube channel, LKT Bro Financial Freedom. Friends, if you have knowledge about F&O, please skip the video till this time frame. What is derivative? Derivative is a financial contract that derives its value from the performance of an underlying asset like stock, commodity or currency. It is often used for hedging or speculative trading. For example, Nifty is an underlying asset. Derivative means financial contract. Its value from the performance of an underlying asset. If Nifty is going up and down, based on that, derivative contract will also go up and down. Since it is a contract, it is having an expiry date and the price is much lower than the underlying asset. What is call and put? In option chain, there will be call and put. Call means buy, put means sell. Friends, in my screen, you can see the option chain. In option chain, you can see the strike price. And left side, you can see call loss trading price. And right side, you can see put loss trading price. Once you select the strike price, the left side there will be a call loss trading price where we have to buy, and if you want to sell you have to select the put loss trading price and we have to buy. If I am thinking the price will move up, I have to buy call loss trading price. If I am bearish, I am thinking that market will go down, I have to buy put loss trading price. In both cases, I have to buy the script. First, I want to select the strike price. Nifty is trading at 24,850. This is the underlying asset price and this is the derivative price. If I click this buy button, I can buy one lot. What is ITM, ATM and OTM? ITM means in the money, ATM means at the money, OTM means out of the money. For example, today Nifty is trading at 24,850. If I buy at the same rate, it is called at the money. Any strike price above Nifty trading price. For example, Nifty is trading at 24,850 and I am buying at 25,000. It is called OTM, out of the money. Any strike price below the Nifty trading price is called ITM, in the money. For example, if Nifty is trading at 24,850 and I am buying at 24,600, it is called ITM, in the money. Why should I want to consider about ITM, ATM and OTM? For that, you should know what is delta. For example, I am bullish. Nifty is going 100 point up. How much money I can earn? This calculation is called delta. If tomorrow Nifty is going 100 point, if your delta is 0.5, your profit will be only 50 rupees. What is theta? Theta is nothing but the time. For example, option buy is expire in 2 days, but my script is trading at rupees 100. Next day, there is no changes in price and all parameters are same. One day gone. Next day my script price will be 50 rupees only because of theta effect. So better to trade in the longer time frame. If you understand till now, let's move on to our strategy. Hello friends, welcome to learn about our basic strategy. Before we learn about how to draw a correct trend line, we should know what is a trend line. Trend line is nothing but a connecting a two impulse wave. So what is an impulse wave? Anything going fast is called impulse wave. So impulse wave will be very fast and it respect the price action. Anything going in a sideways is called corrective waves. It respect the time factor. If you want to draw a trend line, there should be a two impulse wave. For example, if the chart is like this, so our trend line will be like this. This is our trend line. If it is a downtrend, the trend line will be like this. And one more thing, in both case you can see my trend line was right side. I will show you a real example in Nifty 50 index in the 4 hours time frame. You can see there is a sharp move to the downside. After that there is a consolidation phase. After that sharp move to the downside. Now if you connect these two impulse wave, we will get a trend line. This is how we can draw a perfect trend line. We will see one more example how we can draw a trend line in a real chart. There is a sharp move to the upside and creating a running flat. After that sharp move to the upside. By connecting these two impulse wave, we can make a perfect trend line. This is how we have to draw a trend line. So you can see I am drawing in my right side of my chart. In both scenario, it is an uptrend. I draw a right side in my right side of my chart. This is the downtrend even though I draw a right side of the chart. Always we have to draw in the right side of the chart. Friends, now we will see why we execute this trade. First, there is a breakout of the trend. Second, it was broken the last impulse move. After the sharp up move, it is an impulse wave. We got a corrective wave. It is a running flat. Now there is a high probability to go up. If you ask me, there is no chance for coming down, my answer is yes, there is a chance. Because technical analysis only can predict. It is not a rules that it has to go as we thought. Unless until it did not break the top, it can come down and break this low also. Unless until we did not break this top, we are not sure that it can go up. It can come down also, but it will not break this low. At present our stop loss will be below than this level. Once we break this top, our stop loss will be here. And our target, regarding our target, see, this is our strategy that there will be an impulse wave and there will be a corrective wave, right? After that one more impulse wave. After that it will go for another corrective wave. After that one more impulse wave. Unless until we did not break this impulse wave, we are not going for sell. So every correction we will accumulate or we will add our position. This is our strategy. I was planning to create like this 10 backtesting video. If you are interested, subscribe my channel and click the bell icon. Now we will learn how to execute our trade in the paper chart. Friends, this is the website. Website name called upstox. OPSTRA, upstox. You can search in the Google. After you log in upstox website, you can see the page like this. After you select the index, you have to select the option. Then you have to select the period. The longer time period will be the safer side and high probability for winning the trade. After you open the option chain, you have to select the strike price. My view was bullish. My strike price was 23,000. My derivative money I have to pay 2,717.5. Once I click buy and add position, to buy this lot you must hold in your account 67,938 rupees. After that, you can save this strategy by clicking the save strategy and save strategy to paper portfolio. Once you save in your portfolio, you can see in the paper portfolio your script will be displayed. What you buy will be displayed here. For our strike price delta 0.76, it means every 100 point nifty going high we will get 76 rupees, and you can track this one also. By practicing like this, the confidence level will be increased, and it is 100% safe and no money for this. It is absolutely free. From this video, if you learn something, please consider to subscribe my channel. Thank you for watching. See you in next video. Until then, goodbye.